Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1347A, and today's date is August 2nd, 2017, and the title of the episode is, It's Not the Stock Market Bubble You Need to Worry About, It's the Everything Bubble. Let's get into the economic collapse financial news. In previous reports, we talked about how the European banks, well, they're not doing well at all, and Europe knows this. The central bank in Europe knows this. This is why they're talking about freezing the retail accounts when the banks fail. And investors who think that Europe is close to adopting an effective approach to dealing with failing banks may want to think again about this whole thing. Now, judging by the reaction to the story by investors on social media, it appears that the EU, well, just like every other government institution, central bank, they've learned nothing about managing public confidence when it comes to the banking sector. Now, what we're seeing here is that they don't understand that people are very nervous about the banking sector, that they don't want to invest in the EU banking system. And what we're seeing right now, and this is coming from Wall Street analysts, they're encouraging investors to jump into EU bank stocks. The fact is that there remains nearly 1 trillion euros in bad loans within the European banking system. Now, it's going to be very difficult to convince the people that everything is okay. And all these different resolutions that they're coming up with, well, it's not making people feel very, very comfortable here. Because we know out in Spain, we know out in Italy, guess what? Their banking system is falling apart. Let's not talk about Greece and the other countries. Now, you could see that they're trying to do whatever they possibly can to make people think that everything is fine. They have stress tests. They're telling you that everything is great. They've been bailing out institutions left and right or bailing them in. But what we're really seeing is that the EU banking system is in big trouble. The same thing goes for the U.S. banking system. But again, there's this huge printing press here where they can keep the system here afloat a lot better. Because remember, each country, they have to receive the printed currency, or should I say the currency that just created out of thin air. And it's a little bit more difficult to do. Here, it's intertwined within our system, and that's why it's a little bit easier. But the main thing that we're seeing here is that we're starting to see the economy the way it was back in 2008, 2007, right before the entire system came crashing down. And we've been looking at all the economic indicators, and they are not improving whatsoever. Actually, CoreLogic just came out, and they're reporting that home prices in 4 of the nation's largest cities are now considered overvalued. And I'm sure if they looked at the other 16 cities, and of course these are all the cities that Kay Schiller uses to show us that the housing market is fine, the Fed jumps on top of that, the government jumps on top of that, and they are all looking at the same exact data saying everything is perfect. But what we're seeing is in the cities of Denver, Houston, Miami, Washington, D.C., and I'm sure it's going to be New York, San Francisco, they're saying that in these areas, home prices right now are overvalued. They exceed sustainable levels. Now, to determine the market value of these homes, that they're overvalued, CoreLogic compares current prices to their long-run sustainable levels, which are supported by local economic fundamentals like disposable income. And what we're seeing is that home prices are marching ever higher, up almost 50% since 2011, and they don't see any end in sight right now. And they're saying it's going to reach a point where this housing market might come crashing down. And I'm going to say it's not might, it will come crashing down, because this entire system is based on a lie. And lies only go so far until they're found out. And once they're found out, everything comes crashing down. Now, ADP, they've come out with their employment figures, and what we're seeing right now is that we have lost more jobs in manufacturing. Now, service jobs, well, yes, they were added to once again because this is all the country has right now, and they even manipulate that data because we're seeing factories close left and right. The automobile industry, they're struggling right now. They're not going to be adding workers. Actually, they're letting workers go. We see that manufacturing, they lost 4,000 jobs in July. And we know that manufacturing is having a very difficult time right now. And the service industry, the food industry, the retail industry, where are these jobs being added to if there are thousands and thousands of stores closing, corporate offices closing? It makes no sense. What they're doing right now is they're just manipulating everything because we're at the end game here and they can't even make sense of this. So they're just manipulating every piece of data that comes out because if they just tell the truth, people will be absolutely shocked that all of this was a complete lie. And it's been a lie for a very long time. Now, Greenspan is out there and he's saying we have major problems in the bond market. And he's saying that we are entering a period of stagflation. Now, it's not the stock market that we have to worry about, he says. It's the bond market. And I actually agree with him. I think the bond market right now, this is something that everyone is not looking at because all we're seeing is the stock market moving up and up and up and up. And I think the stock market will eventually come down, or maybe it'll just keep going up. It doesn't really matter because it means absolutely nothing. I think the bond market is the important area right now. Now, 10-year government bonds, their yields fell from 15.8% in 1981 to 2.3%. I mean, think about this for a second. Now, we're experiencing a bubble, not in stock prices, but in bond prices. And this is not discounted in the marketplace. Now, Greenspan, he is saying that over the last 2 years, this bond bubble is much more dangerous than what is going on in the stock market. And he's not the only one. In recent months, there's been a growing number of those who are concerned that the real bond yields in the US, the UK, the EU, and elsewhere, well, they're well below where growth and inflation rates seem to suggest they should be. Now, we've been in a period of stagnation since 2008. As a consequence of the sharp decline of capital investment and productivity growth, we are moving into a different phase of the economy, to a stagflation not seen since the 1970s. Now, think about this once again. What happened in the 70s? We came off of the gold standard. We were going onto a new system. And what's happening right now? We're coming off of the petrodollar system, ready to go onto a new system. But this time we're at the back end. There's 20 trillion plus worth of debt. Interest rates are very low. Wages are declining. And what we're seeing right now is we've reached a point where we're at the everything bubble. Back, if we go back in time, we had the dot-com bubble back in 2001. We had the housing bubble in 2008. We are now above all of those bubbles. We are at the everything bubble, and everything's going to become crashing down. Now, it's hard to believe, but Greenspan is a gold bug. Even though he was with the central bank, not too fond of him, but he is a gold bug. And one of his quotes is, "In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There's no safe store of value." What he's saying is that you need precious metals. That is your insurance policy when the paper currency basically collapses. And everyone should insure themselves with gold and silver. This is going to protect everyone. Now, we can see the market has hit 22,000 points. Everyone should be clapping. Now, you got to remember, this is completely manipulated. I mean, think about it. The Swiss Central Bank owns a lot of Apple stock. Japan, they own a lot of the corporate stocks. It's all manipulated. If they didn't take the $9 trillion from 2008 to the present time and shove that into the stock market, where they bought a lot of stocks, they bought a lot of bonds, where they bought the toxic real estate, and we just took away that $9 trillion, what do you think the economy would look like? Now, that $9 trillion, that didn't reach the people. The people are struggling. What they did was they used that $9 trillion to make everything else look good for themselves. The stock market looks good. Yes, people are benefiting from it. A lot of people are in it. They think it's going to keep going higher and higher. Maybe it will. But you know what always happens. It comes down. Eventually, we hit that point where something just breaks. You can pretend it's not going to happen. You can say, look, it hit 22,000 now. But eventually what's going to happen, these things come crashing down. It always happens. And this is when everyone doesn't say anything afterwards because they were just screwed. And this is what happened in the Great Depression. This is what happened in 2008. And this is what we're going to see happen once again. Now, Trump is out there, and he's pointing to the stock market, saying, you know, the stock market could hit all-time highs again. 22,000 was 18,000 only 6 months ago on Election Day. And he's saying, look how great this is. Now, a lot of people think that he's out there saying that he's responsible. Now, maybe he's out there saying this, but I think what he's doing right now think about this for a second, going back in time to the present day, the corporate media, the Fed, everyone, they've always looked at the stock market and they've always gauged everything on what the market does. Actually, if you listen to the corporate media and the financial pundits, this is all they talk about. How great it is. If it's going up, it's fantastic. So what I think he's doing right now, because he knows it's a bubble, he said it during the election, that's in a bubble, housing's in a bubble, we have bubbles all over the place. He knows it's a bubble. He's using this against them. And you're probably thinking, well, what do you mean he's using this against them? Yes, he will take a little bit of heat when this thing comes down. But he can always turn around and he can always cite his case where the Fed, the corporate media, has always said that look at the stock market, look at the stock market. And he can use this against them. Now, again, he might take a little heat for this, but it's an easy case to show that their system that they've been touting about for all these years, it doesn't work. The stock market can go as high as you want it to go, but it's meaningless. And a lot of people are out there, they're thinking that, oh no, he's on board. I really don't think he's on board. Yes, I think he's trying to work with many individuals in government, but from his actions and what he's trying to do, and the things that he turns around and does, and this, people call this flip-flopping, it's because he's trying to maneuver around all of this. Now, let's think about this for a second. Sometimes you need to let the children, and I'm talking about the corporate media, those individuals in Congress, you need to show everyone what their policies have actually done. Let them run the course. And you can turn around and say, see, that didn't work. A lot of parents do this with their children. Go ahead. Try this. Let me know how it turns out. They think that you're behind them, but you're trying to show them that it doesn't work. And I believe this is what he's been doing, because throughout the entire, last 100 years, 200 years, this is what the Fed, this is what the deep state has been doing. They've been using this argument that the market is the economy. And if we just pump it up, everything is going to be fine. Everything that we're doing is for the market. We're creating currency to pump up the market. So what he's doing right now is he's setting them all up. Now, a lot of people are going to say, no, he's not. He's not setting them up. That's impossible. He loves the market going up. Yes, it makes for great press. It makes it look like he's going along with this. He knows what's going to happen. What do you think? The only people that know what's going to happen is the alternative media? People that are out there talking like, okay, we've seen a bubble before, the stock market has risen, it's dropped. We've seen another bubble before, the stock market has risen and dropped. And think about it, if you go all the way back to 1929, where they said, wow, the market just hit 400 points, we've never seen this before. Back in the 70s, when it hit 1,000 points, they were having parties. When we hit 12,000 points, like what, 2001, or hit 14,000 points in 2008, we've never seen this before. Here we are, 22,000 points. What do you think is going to happen? Yeah, maybe it'll go up to 30,000. Maybe it'll even go up to 40,000. But it's meaningless because the higher it goes, the worse off it's going to be. And in the background, the economy is going to be falling apart like we've been seeing. This is what we've been tracking. All throughout this period, think about it, from 2008 to now, what has happened? The market's gone up. Oh, it's gone up. People have made money, of course, yes. It's gone up again. But when you look past that, what else has been happening? Corporations have had large layoffs. We've lost manufacturing jobs. Retail stores started to close down. That accelerated as we move forward. Because remember, right now, and I saw a new report on retail and online sales now make up 12% of the entire retail market. And the retail market is $1 trillion business. So when they talk about billions of dollars in the online sales, it's peanuts. This is accelerated where you're seeing more and more stores close down. We know the unemployment numbers are completely fake, phony, and false. All of this has been happening during the same period the market has been going up. Now, the market is looking at corporate earnings, not at corporate sales and revenue. Earnings and revenue and sales are completely different. You can boost your earnings by shutting plants, laying off people, buying back your stock, and you can say my earnings are up. The one thing you can't do is say my sales are up. My revenue coming in is incredible. The federal tax receipts, the state tax receipts, those have been declining over time, all through this period. All of this has been happening behind the scenes while the market has been going up. So you can see right now, as the economy, the real economy, and this is what happened in 29, this is what happened in the 70s, this is what happened in the 80s, this is what happened in the 90s, this is what happened in 2000. The real economy always falls apart, and then the market comes down. We're seeing the same thing. So get ready, get prepared, because it's coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.